Anybody who wants to get into, managing their own properties need to hear this story. It's not easy, man. I mean, the cash flow when it comes is good, but when things go wrong and if you're not built for it.
Welcome. You're listening to the Apartment Investing Show. This is where you'll learn how to start or scale your apartment investing career. Your host, Adam Adams, founded such an incredible meetup that Meetup HQ flew him in as their guest speaker. Adam and his guests will show you how to create residual income by investing in apartment communities. Now, here's your host, Adam AAA Adams.
I am your host, Adam AAA Adams, and today I am without Jason Lewis. So Jason is actually on another call at the same time as this. So he won't be on this call, but that solo episode with him will be coming out any minute. Today, I am joined with Raj. Raj, you know what I should have done? I should have made absolute certain that I knew the best way to pronounce your last name before we got started, and I neglected it. So I guess my first question is, can you pronounce your last name for me so that we can get into the rest of the episode?
Man, sure. I hope I can do it right. It's Raj Tekchandani.
Tekchandani. Tekchandani.
Perfect.
Awesome. Well, Raj Tekchandani, pleasure to have you. We've been friends for a little while. We've collaborated on some things, helped each other out. So I appreciate everything. And it's good to finally get you on the show. If I remember correctly, I was going to get you on the show like 7 or 8 months ago, but then it got really busy with putting on the Raising Money Summit, and I canceled on you.
Yes.
I hope you'll forgive me. But for the listener, we're going to get into some stuff that I think is going to help you a lot when thinking about maybe growing your presence, marketing, branding. And if you're looking to attract OPM, that's other people's money, Raj has some ways to systemize this to make it a lot easier for you. So we're going to discuss how to market, how to brand so that you can grow your influence and attract more capital. So I'm really excited about that. I think we're going to have a lot of value on this podcast. So Raj, I want you to just take me to the first real estate deal you'd ever done. I don't have it all in front of me, but I know you have like 9 condos in Florida. You've got 16 or so, maybe it's 20 units of multifamily that you own by yourself. And then you're on the general partnership of several hundred other multifamily syndications where you were able to use these same systems we're talking about today to actually attract more capital. So I'm excited to get into it, but take me back first to the very first deal you ever did. What year was it? Were you stressed out? Were you freaking out? Was everything okay? Or was it just smooth sailing? Tell me about that first deal.
Oh, man. The first deal was actually a total accident. I was chugging along in my startup job, working however hours we were working on, when my friend said, we need to take a trip down to Orlando. I said, why? Do you think we are age of the Disney kids? He said, no. Orlando is a booming place. It will be booming in the future. And the house prices or the real estate prices are just down. I said, well, interesting. I've never invested in a real estate, but I'll go down with you. And he had some properties there. So we take a trip down there, and Orlando, my God, the property values were incredibly, shattered. There were condos that had been selling, a few years ago for $200,000 or $250,000, down to $30,000, $40,000 for those condos, 1 bedroom. And I'm like, oh my God. And this is, I still conservating my money sitting in my bank, in my CDs. I said, okay, this is a great opportunity to break one of those CDs and invest in 1 condo. $34,500, was my first purchased condo. And I, plunged, and it's been no looking back from then.
Okay. So how did you close on this deal? Was it all cash? Did you get a loan?
No, this was all cash. And,
okay.
There was no loans.
Was it more like a partnership between you and your friend who took you down there, or did you buy this on your own?
No, I bought it on my own. My friend already had a couple of, condos in the same apartment complex or the condo complex. So it gave me a little bit of comfort that he had already invested. in that apartment complex. He knew of a property manager that could manage this for us because, managing even a small one-bedroom condo remotely was not my target to do this. But yeah, fortunately it worked out well, and I fell in love with the cash flow coming in, and I also sensed the prices going up. So I took another step and invested in another one, another one, another one, and eventually, moved on from one bedroom to two bedrooms to three bedrooms, and eventually bought 9 condos that are beautifully cash flowing till recently. We'll see how it goes. Had no issues so far in that investment.
Awesome. And so, when did you buy? What is it like? Was it 16 units of?
No, it's actually 15 unit multifamily.
15 units.
Yeah.
Okay. When did you buy that?
That was in 2016. So, about 4 years later, when I got comfortable, it's still working full time in my, startup job, working in crazy hours. And I thought I could, now move from single family to, now that I've learned about or read about, multifamily, the ease of use and, economies of scale, and how is one bill, one tax bill versus, 9 bills that I was paying for all these places. So I took a plunge, found a, property on LoopNet, believe it or not, but it just happened to be down the street from where I live. And it's in the neighboring town, which is a town that is upcoming. It is not, your town that, I would compare it to, posh towns or whatever. I knew it was on the street that is better part of the town. So again, another bet, I took it and I invested in it.
Okay. So, and that's in Boston, close to Boston. Where do you live?
Yeah, north of Boston. Yeah.
Let me ask you this question. What made you even think that it was the right thing to get into multifamily? You had condo, one bed, two bed, 3 bed, and then all of a sudden you were thinking, oh, I'll just buy a whole building. I'll just buy an entire building. What kind of got you into that?
I think it was more of, managing, one entity versus so many different entities, and the tax bills and the different kind of bills and the property management, of all these things. And I said, okay, I'll find one property manager, just one, thing to deal with. And it's, close to my house, so I can keep an eye on it. So why not? So that made me comfortable doing a multifamily.
Okay. Was it more 1 bedrooms in that multifamily, 2 bedrooms?
These are actually all 2 bedrooms and 1 bath.
All 2. Okay. All right, so here we are, 2016. You find a property close to your house. Your thoughts are, I've been doing all these single family, and it's a lot of LLCs. It's a lot of different tax bills. It's a lot of different work. Maybe if I could have it all under one roof, it would help me manage it a little bit better. Yeah. So how come you didn't go and sell all these condos and right then?
I never thought of it because they were simply cash flowing,
Okay.
Beautifully. And there was the property manager was working fine. The condos are cash flowing. And I was like, why should I do that? I had some extra cash come in. So I said, okay, let me invest this cash. I'm not going to put my money back in the CDs or savings account again. So this is it.
Cool. So tell me just how is that 15 unit working out? Notwithstanding that we're recording this during coronavirus and things change a little bit during this time. And I suspect things might change for the next couple of years. Yeah. However, I'm very curious, what was the purchase price of your first apartment that you bought on your own? And how is it cash flowing? What's the cap rate, et cetera? What does that deal look like?
So the deal, now it's been a while, but the deal, when I took it over, the purchase price was just short of $900,000. So I, put in a chunk of change from my own. I collected all my, cash, whatever sitting there. And I said, okay, I'll take a loan on this one. Signed on the loan document, took it over. Building was 100% occupied. The cap rate at that time was probably 7 something. I don't remember exactly. But there was a property manager in place. And I was like, this is beautiful. I don't have to do much. It was a nightmare.
Oh, boy. Okay, I can't wait.
So the story just takes a turn, right?
All right, so let's do this, Raj. I promised the listener that we're going to really get into the marketing and raising money.
Yeah.
And that's where we're going to go.
Yeah.
But you just mentioned that you had an issue. It was a nightmare, I think you said. So I think they need to hear it before we get into that.
Absolutely, they need to hear it. And anybody who wants to get into, managing their own properties need to hear this story. It's not easy, man. I mean, the cash flow when it comes is good, but when things go wrong, and if you're not built for it, like I'm a software guy, I'm a technology guy, and these issues just came up, right? I mean, so everything looked good on paper, right? I mean, I realized that there's a difference between economic occupancy and physical occupancy. The physical occupancy was 100, the economic was close to 60. Nobody, showed me those reports. I didn't do proper due diligence. I mean, thinking that, hey, I know how to, buy properties. I've got 9 condos in Orlando. This will be a piece of cake. The property manager turned out to be, which was not disclosed to me, a relative of the owner. He was doing whatever it was to be done to sell the building, and he quickly bailed out on me after we purchased the building. There were bills that were not disclosed. I mean, expenses were not disclosed. I mean, the snow removal, the, pest control, little expenses that, you would probably overlook owning a bunch of things in Florida, right? I mean, there's no snow expenses that you pay attention to, but now we are in Boston. And those expenses piled up on me, man. Fortunately, I was still paying my mortgage, so I was okay. So I scrambled to find another property manager who came with a decent, references, but that didn't work out either. Occupancy was getting up, but not getting to the point that I was comfortable with it. Still, because it's close to my house, I got more involved than I wanted to. And yeah, it was a nightmare. And, after a while, I don't know if you guys or your listeners would know, in that area, we had some gas explosions, the Columbia gas leaks. And the entire neighborhood, this building wasn't affected, but the neighborhood was impacted. So we were told, don't collect any rents from these tenants, just till the situation is better. I mean, there was no gas connections, there was nothing. We had to supply them heaters. It was interesting episode. It was a learning lesson.
When did it turn around? I mean, it seems like it's doing well now.
It's doing well now. I mean, it turned around after my third property manager took it over, and he said, you know what, we'll turn this around. And they dealt with all the Columbia gas insurance and all those things for me, and I was ready to sell it off. I mean, I was like, okay. Fortunately, for my case, when I bought it, I knew the area well, again, because I'd done some research on the data of the rents and all that stuff. I knew the rents were below market. That fortunately has, kept the boat afloat. And, I bought when the rents were 800 or something change. Rents are now almost 1,500 in that one unit. So wow. The rents have gone up, and we had some Section 8 tenants, so they kept paying, pretty good. So things have been keeping afloat there, and now the property is in decent shape.
What is the NOI right now?
I'll have to look into it, Adam.
Okay, but all good, no problem.
Yeah.
But it sounds to me that the NOI more than doubled.
Right.
It just feels like it more than doubled.
It doubled.
So if you bought it for about $900,000, there's a good chance that you've gained $1 million in equity.
Yes, I think I would say that definitely the prices are up, minus since the COVID situation. We don't know, but I was getting offers for 1.5 till last year, and I said, let me hold on and see how we can completely turn it around. Awesome. So I'm holding it for now, and it's paying the bills. So
awesome. No I'm glad you did. I'm glad you did. So then you got into bringing yourself to get in front of people, let them know about opportunities, use some technology, use your marketing skills, and you've been able to raise money for syndication.
Yeah, right.
So there's a few listeners, I'm sure, that are thinking, man, that's what I want to get into. I want to get into being able to raise equity. And Raj has done a really good job at this. So Raj, take us through, I guess, the process of actually attracting more capital, systemizing it with the technology, and any other steps that you think are going to be helpful for the listener to be able to do what you've done.
Absolutely. So I'll just share what worked for me, right? So what worked for me is, we'll skip over to how I moved from that into syndication. So I went through a whole lot of education for myself. Took almost a year educating myself, investing in passive deals first, and then getting into, doing my own stuff. But all through this, I got very comfortable with the process of syndication itself, right? Understanding I was good at finding data, markets, and all that stuff. So working with passive general partners as a passive investors first to learn, what happens when you do a syndication of this level, 200 units or 300 units, or whatever the numbers are. It's a whole different ballgame. It's very different from a 15 unit. So that's what I learned and did a lot of. But once I got comfortable with my passive investments, I teamed up with other channel partners to say, okay, I want to get into more of this. And I think I have a lot of friends that have no idea about this stuff. Their money is still sitting in the bank. They're still, investing in stock markets. They have no clue about how to take the benefits of what a real estate investor can get. So basically, it started with, meeting people, bringing people together. I had to buy lunch for, my 4 friends in a small place. I said, come listen to me. Come listen to me. This is what I'm doing. And they said, okay, it's after hours or whatever. They had a break or some sort. And so 4 people got together in a room and they said, that's exciting. And I said, okay, I'm going to do this again. So I had another meeting and eventually created a meetup. This, because I just wanted to systemize or formalize it. So I created a meetup in the Boston area that, like I said, had 10 members initially. Now it's grown up to over 600 members. But what I did was and this meetup was not your typical meetup. Hey, come drink, have beer, shake hands with people and just, talk and network. I purposely kept it as a very educational meetup. So, we took one topic in every month, every meetup to talk about data analysis and how do you find markets? What do you look for in a market? What are the factors that you consider? What's an underwriting? What do you look for in underwriting? What does comps mean? What are the technologies available to do comps? So a lot of that educational stuff went along, and and through this, I was also learning on my own. Like I said, I had a technology background, so I started using some tools like Odor, Unomi, and all this stuff, just to educate myself and then educate my investors. A lot of investors, thought, okay, this is a data guy, he's doing something nice, so we'll invest with him. But I said, let me just make sure that you understand these things properly. So a lot of education went into this stuff. I mean, it may look easy now, but so sort of almost built like a knowledge platform for these guys that I had through my meetups.
Okay. So a couple quick questions. For the next one that I want to ask, because I've got so many in my head, I want to ask you, was hosting a meetup a huge part of you being able to raise equity for deals, or was it just kind of a nice to have?
In my case, it was, I would say, the huge part.
Okay.
It was a huge part. But not the only part. I mean, there was a lot of other pieces that I was doing along with my meetup, like my blogs, my podcast appearances, all that, contributed to it. And plus, the deals coming along. Yeah.
Well, may I ask, how do you get booked on podcasts? So for me, it's easy right now. For you, I'm sure it's really easy today. Mm-hmm. But for a listener who hasn't yet gotten on a podcast ever, and they heard you say that those really helped, what would you say would be the easiest way to kind of get into being a guest on other people's podcasts? What do you have to do?
I mean, you have to have a story. You have to have a story that you can, people can relate to, and your host should, take you on that story and say, okay, this is something that my listeners can believe in. For a lot of my initial podcasts was, how a tech guy, left his job and full-time doing real estate now. That was my story, the transition from technology, data analytics to a full-time real estate professional. That was my story. And obviously you have to find the right people you want to connect with. I mean, Adam Adams, Michael Blanc, Rod Cleve. I wrote notes to everybody saying, hey guys, this is my story. I think I've been hearing your podcast. I'm a big fan of your podcast. I've heard these episodes that, resonated very well. These guests were absolutely brilliant, but I have a story that I want to share with your listeners. And some of them, most of them gave me a chance, I would say.
I really like that. That is really good information. Like for a listener who's wondering how to get booked on podcasts, that was just on point. If you do the way that Raj just discussed, where you listen to the episodes, get to know what is being said, and then say, and I have a story that I would love to share, or I would be happy to share. I guess for me, in my opinion, that if I would love to share sounds almost like I want to do this, but I would be happy to share, almost gives it a thought process of, I don't need to be on, but you might want me, so it comes across a little different. So I'd be happy to share my story, being able to go from this to this to this. Yeah. And I would say if you are investing passively in deals, it feels like all of the multifamily podcasters, Whitney, me, Rod Cleef, and Michael Blanc, and Joe Fairless. It feels like if you're coming from a place of, I would be happy to share my story of doing this and then being passive in deals and now doing this other thing, that could really make each of us be like, yeah, I would love to have somebody who could share their experience of being passive investor, because all of us podcast hosts, one of the reasons why we do it, obviously we want to give back. I hope that's obvious to everybody listening, but we also need to be able to get some value out of it too. So in being able to transition listeners into passive investors, I love it. Raj, that was perfect. How about, since you said that it was very important for you and all the money that you've raised for your deals, I think, how many doors are you as of the recording on?
About 650.
650.
Yeah.
Wow, that's awesome. And so for you to raise the equity that it took to close on these 650, you said that hosting your meetup was really important. Could you give us just 2 or 3 tips of what made it so that your meetup is having, I think, 100 or more people every month? I mean, you even had to tell, you even got told by all of your meetup attendees, hey, this is getting too crowded. We need a bigger spot. Yeah, and so you recently did that. What are some tips?
I think the differentiating factor that they found in my meetups was, it was an educational meetup. It was very interactive. I would take up a topic and, maybe a few slides on the projector, get started that way. And obviously when you have, people in the room, there'll be some other syndicators who, come to listen or whatever, then they can add value. So it becomes almost like a mega mastermind kind of thing where everybody's learning from each other, and there is no judgment zone, and people felt very comfortable, is what I felt, from the other side, that they're very comfortable coming in here. I didn't care what their background was, where are they coming from, what kind of experience they had. I said, this is the topic. I'm going to tell you how I've learned it, how I can share it. These are the books, whatever it takes me, I just laid out my story.
And so as you're bringing people in, and you're not doing sales pitches, it sounds like. There's no like sales pitch or anything. Okay, so they feel comfortable. They feel like you're not going to try to cram something down their throat. You're just there to kind of give. You're doing a lot of education. It's not just some meetups are, hey, let's just have beer and do nothing but just connect. And some meetups are like, let's have a presentation that has been presented by a paying speaker who is trying to convert the audience into customers. So you're right in there doing more education. I love that. How about like getting 100 people is not a small feat. Yeah. That's a big undertaking. So you must be, in my opinion, either there's a lot of word of mouth, or you must be marketing it somehow, either outside of Meetup itself, or doing more emails than more other people are doing it, or putting it on Facebook, or putting it on whatever Eventbrite. So tell us, like, what are you doing to market the Meetup so that you can raise more money with the attendees?
Yeah, so all of the above, right? I mean, like I said, my marketing is my passion. Other than the data being my passion, marketing is my passion. I love to. So yeah, I mean, meetup.com is, where I started off, but then I figured out that that's not the only channel. There is a Facebook event, there is a, Eventbrite. So I included all that. And as I was writing weekly blogs, and as part of my blogs, I would mention that, there is a meetup here. So like a lot of cross-referencing things going on. My LinkedIn post, referred my blogs referred to some kind of meetup event. My meetup event, talk about the whole education platform. So there's a lot of things that came in together, and I didn't plan it that way. It just happened that I was doing a lot of things that are kind of synergetic. And the other day, and recently I also started posting on Instagram, right? I mean, that was my last thing. I was like, Instagram is for probably people who sell merchandise or fashion apparel. I never. So that was the platform that I had not even publicized on. But recently I got a investor. So how I ask everybody, where did you find me? And this guy says Instagram. I said, holy cow. I said, okay, now let's bump up the Instagram post as well. So yeah, it takes, you never know what works, but Meetup was a good starting point. And not every Meetup gets 100 people, but yeah, I mean, it gets up there. But I can see there is a lot of, interest in that Meetup itself.
Yeah. This conversation's taking me back to, what's his name? I should know. I read a book called 10X Rule. Grant Cardone. That's who it was. Yeah. I had a lot of friends, several friends who were into that, and I was always like not really into it. It wasn't really my personality, and I never really resonated that well at the time with Grant Cardone. And people were like, "Oh, you got to read this." Okay, whatever. I've got an Audible. I'll throw it on there, right? So I think I paid for it with a credit and checked out the book. And as I got into it, I was like, "This guy is exactly like me." And Raj, you're doing the exact same thing that I'm about to pull out. What it is that when we're doing our meetups, other people do a meetup and they only just have the meetup event itself in one place, and 3 or 4 people come, or 10 people maybe. But you are posting on Eventbrite, you are posting on Facebook groups and Facebook events, and you're blogging about it. And this is like the 10X rule. All as I think of it, it's like, just try different things, see what sticks, always be out there, get in front of people in multiple angles. And that's why you're having 100 people at your events. That's good stuff. I really appreciate it. Now, what about systemizing, automating some of the back end process that for some of us, it takes us a lot of effort, or we're just already too overwhelmed to even start because we're like, that seems like a lot of work to manage hundreds of people on our list.
It does. And, I got overwhelmed pretty quick. I mean, and, because you want to pay personal attention to everybody and, every question that is asked or everybody who wants to meet. So, I mean, after meetup, obviously people say, hey, Raj, can I have a cup of coffee with you? And I've never said no to anybody. So, and that cups of coffee, at that time I was drinking so much caffeine that it's just, so I said, okay, let me do something different now because I physically don't have that much time. So I said, you know what? I mean, if you have a general question about this, I'm just putting out an e-guide. Why don't you read that first? I mean, that's just my experiences of how I learned what you want to learn. So direct it to them that way. And then, and obviously doing all this, I'm putting a CRM system in place. I used to be a big HubSpot user in my previous job when I did marketing. So I was, familiar with, demand generation kind of technologies. How do you write a blog and how do you promote a blog and how you attract the whole funnel thing. But after I transitioned into my startup, I didn't put in my monies into that. But lately I had to, so we bought an active campaign, systemized active campaign, a lot of automation in there. And I don't want to go into too much detail, but yeah, you got to do a lot of these systems where after any event, you bring them all into a funnel and you sort it out through a funnel, giving them different drips based on their interest levels, and eventually see their interest in how far they want to go, or they're just tire kickers, or they're just seriously interested in investing with you. And so quickly that funnel kind of, filters out people that are really interested. and I'm having less coffee and more effective coffees with people that kind of come down the other end.
Awesome. I love that. No, this is so the funnel, making sure people know who you are. So you're getting out there, but instead of having to do lunch or coffee with everybody who wants to get in there, you kind of start by you created something where it answered a lot of their questions so that you weren't saying the exact same thing every day. Like, here I am at coffee again discussing IRR. Here I am at coffee again discussing cash on cash return.
Yes,
I am.
Exactly.
And so you created something that it gave the basics and said, if you should take this, or you should have this, or you should read this, and then any other questions that aren't on there, then let's sit down. Let's make sure that you really want to do this before we have that conversation, right?
Yes, exactly.
So what about preparing these lead magnets? What kind of lead magnets do you have to get people into the funnel? What have you done with them? How do you make sure that people get them? And how do you track what's going on in the background? It sounds like you have multiple of them. So yeah, take it away.
So yeah, absolutely. So I started with my first lead magnet that's basically explaining what syndication is, right? For getting started with real estate syndication. That was my first lead magnet. It was simple, nice pictures in there, some pictures of me, playing golf. It says, guys, this is what happens when you invest passively. You get back your time, just to get people excited about it, and just basic terms about syndication. And that did well for a while and had a bunch of downloads on that. And people start meeting and saying, so it didn't go into details of, what this is, what that term is. So my next publishing was 50 terms that you should know before investing in a syndication, 50 terms. That goes into the definitions of IRR, what's an accredited investor, what's a sophisticated investor, what's a 506B. So basic terms that you and I, dabble away, but people just coming off of, would know. So just basic terms. Okay, great, that's great. So, but I'm still not comfortable here. So I put another thing out there, 99 questions you should ask before investing in a syndication.
99 questions?
Yeah.
Do you have that handy? Can you give us like a few that you think that people wouldn't normally consider?
Absolutely. Some of them goes into, who you're knowing your syndicator, right? What is your syndication team? Knowing your markets, knowing your property, number of units. I can rattle down, but it's broken into a different section. The first section is the syndication, the second section on the property, a deal itself, the business plan, the execution of the business plan. So I take them through what questions that I had been asking and people have been asking me over these coffee sessions, right? Compile them all together. I could have called it Coffee with Raj and compiled it in 99 questions, but so it's easily available from my website. So I did all that, and then I was tracking everybody who's downloading it, and I can easily, somebody asked me for coffee, I can always check whether that person has downloaded any of these magnets and where they've gotten through. Everything is now trackable through Active Campaign. And even then, sometimes, people are like, I don't have the time to go through all this. Why don't you just tell me a story? So lately, I put together another one, which has become like the main magnet now. It's called the 8 Pieces of Pie, where the pie is passive investor education. So it's an email course, Adam, which 8-day email course, small, bite-sized emails that go out every day. And I can track them too, right? I can track who is reading the first email, who read the second email.
Yeah.
And as part of that email chain of the 8 days, I drop in these other magnets. So after the 3rd day, I will drop in the 50 terms you should know. After the 5th day, I will drop in the basics of syndication. And on the second to last day, I'll drop in the 99 questions you should ask. Now I can track everybody, going through, how much have they done? How much of what I've shared with them, are they really interested? If somebody's really interested in knowing what I do and working with me and investing alongside, would have taken the effort to go through that. So I get a good sense of that. And it's been great. A lot of people have gone through the course and, loving it.
So, man, I have so many questions for you. I love this. Okay. The next one that I think that I should ask you is, who is your perfect avatar? Like, what I teach my clients when I help people raise money, I tell them that they have to have an avatar, and we get really specific on age, race, job title, male or female, how many kids they have. I try to get real specific. So do you have an avatar?
Absolutely. Yeah, I actually
tell
had.
us about
and
that.
that was a big thing, big revelation that I had, that when I was getting all these questions and I looked at my investor base, right? And I said, who has invested with me? I have all these investors that are interested in, discussing or talking or coming to coffee, but who has really invested with me? Either they're friends. If you take those friends out, then who else is there, right? So my avatar kind of narrowed down to people who are, working in their late 40s, early 50s, same age group as I am, have a technology background, typically a male, but could be females too. Usually, couples, they work together, they have kids that are in college or about to go to college. I didn't do much with race, but but that was my avatar. It's not somebody that I can say, hey, I'll give you passive income and you can retire today or day after tomorrow. No, these guys are making enough money. They have enough money. They just want to diversify their portfolio. So instead of preaching them, retire in 4 years, they don't want to retire. They're happy with their jobs. Additional side income would be not bad, but they really want to diversify their portfolio. They are doing well in some cases, or most cases. They even have a financial advisor that is advising them to put more money into, stocks or whatever. But here I am telling them, hey guys, I'm not telling you to move money away from stocks. I'm only saying that stock market is going well right now. Tomorrow it can go down and you'll have no control over it. But so invest in something that it's not maybe liquid as a stock market, but it's something tangible. Invest in real estate. And, I can show you the ways I've done it. Passive income is great, but look at the benefits, right? The diversification benefit, the tax benefit. So my avatar is slightly older person that is doing well in their job. I'm not sure about the title, but they are at a senior level, I would say. And the other part of the thing is there are a lot of business people in my portfolio as well, people invested with me, because their thing is to get the tax benefits of multifamily.
Okay, business owners, you mean,
business owners,
like
yes.
entrepreneurs
Yeah.
that are doing well. Got it. Very interesting. Man, Raj, this is one of my favorite interviews. I'm really enjoying this. And, I want to collaborate with you on some of you mentioned 4 different lead magnets.
Mm-hmm.
The first one, which was, I think, the basics. The second one, which was like 50 questions. 50 terms you need to know before you invest passively. And then it was the 99 questions that you have to ask the sponsors.
Yeah.
And then what was the fourth one again?
The fourth one was the 8 pieces of pie.
Yeah.
Which is
okay.
Email course. But that combines everything into it together.
It lets them consume the content one bite at a time.
Yeah, one bite at a time.
I like that. That's cool. Really good stuff. And you're tracking all of this.
Yes,
so here's my next question. I think it's a really important question. Number one, why do all of this stuff? There's some listeners that might think that you don't have to do all of this stuff before you create syndications and raise money. So if they believe that you might not have to do this, why are you doing this?
That's just work for me. I mean, I absolutely believe that there is other ways to do it. I mean, I have friends in, syndication who say, Raj, what the hell, why are you doing marketing for? Why do you need marketing? I was like, because, I'm not as well connected as you are just yet. And someday maybe, then the repeat customers will come in and I don't have to write that many blogs. But right now, the investor base is new. They're still learning from me. And I need to put my name out there that I am a sort of an authority in this now. I understand what I'm, sharing with them. I understand what I'm investing in. I'm investing alongside with them and why they can take this bet with me.
Really good stuff. Raj, what other parting advice do you have for a listener who wants to follow your footsteps?
The only thing I can say is, first thing, they have to educate yourself. I mean, you have to get educated. You have to know and take this thing very seriously. I mean, this is, if you have a deal and you're taking somebody's private money, it's a big responsibility that you're taking along. And you have to be SEC compliant, pay attention to that. So there is a lot of things that you have to pay attention to, and this is no joke. So get educated, make sure you're compliant, and make sure you trust everybody. You take everybody's money as your own money. You treat it as your own money, and do good, and good things will happen.
You mentioned your website, a place where we could go to get into your funnel. Mm-hmm. If there's a listener who wants to jump in there, including myself, I think I'm going to jump in there. What's the best way for us to find that website?
So www.smartcapitalmgmt.com. So smartcapitalmgmt.com.
Okay, got it. And we will throw that link in the show notes. Raj, how do you give back?
So I actually give back in multiple ways, right? One is my philosophy of, sharing education is one way of giving. So I've learned stuff. I want to give it back to the other budding syndicators. On a personal front, I work with, a nonprofit that does a lot of education-based stuff for kids in India, underprivileged kids. So I'm hoping that I can, keep doing that as my passion to, help not even in just monetary, but also in my time. And this, my new role in this whole full-time syndicator allows me, to take time off and, travel to different places, travel to India, visit some of these places and still be, adding my value of time and my money to some of these organizations.
Well, I know we got your website, so we can jump into your funnel and see what you're doing and work with you. What about just the number one best way to get a hold of Raj Tekchandani? Did I say it right that time?
Absolutely, man. Absolutely.
Okay. All right.
Best ways, and I'm always looking at my email. I check my email. It's Raj at smartcapitalmgmt.com. Easiest way to get
Awesome. Raj, thank you for coming on the show. I'm going to let you go, my friend, but until next time.
My pleasure, man. My pleasure.
Think outside the box. As a reminder, any investment opportunities mentioned on this show are for accredited investors only. And if you're interested in working with me and my team, then go to realbluespruce.com and click Get on the List. It's that simple. Just click Get on the List to start passively investing. This has been an episode of the Apartment Investing Show with me, Adam Adams. All rights are reserved. And if you haven't done so already, then make sure that you absolutely smash that subscribe button. And I'll see you on the next episode.